Straight up to the precious metal space, where the gold prices have been slipping during the day, trading near a 6-week low right there, trading below 1295 on your screens as well. There is low, the trade is low as optimism on the US economy, poor physical demand for gold in Asia continue to weigh on the prices. On your screens, you can see the gold prices just about marginally in the green right now. Let's get on board then. Vijay Bambani, who's author and CEO at bsplindia.com. Also joining us is Shamik Bose, who's Executive Director, Commodity and Currencies at Microsec Commerce. Mr. Bose, hi, welcome to the show. What's your sense, first of all, coming in for the gold and silver prices? A bad month, but as a quarter, we have seen strong gains.
Thanks, Manisha. Yes, we have. In fact, gold, I thought at one stage was beginning to make a pretty strong statement, holding above 200-day moving averages, but it's still holding around the 200-day moving averages, although I'm not very surprised technically by its $50 decline, because once markets have technically, if I look at gold's pattern on the charts, long-term monthly chart patterns or weekly chart patterns, having declined from $1,920 all the way down to $1,180, it's now still in the process of testing out its support. And a rally here, if it had continued, it would have been slightly hollow. But if it declines here, tests its support again, and moves up this summer, technically I'll be very pleased, because that's the correct move. And fundamentally, I think you've already summarized the point. America looks healthy, although some of it is misleading because of cheap money fueling lots of new asset booms, which can become pretty hollow. I personally think gold is testing support here and could be laying the groundwork for a summer move once again.
Vijay, what's your sense on the volumes today, and do you see open interest increase yet again as we trade very stable though in the market today?
Manisha, where the volumes and open interest are concerned, I think the picture will be somewhat muddy, because today is the last trading day for the 5th April futures, and traders will be by and large preoccupied with the rollover process. So there is a shift in volumes and open interest from the 4th April to 5th April to the June series, and therefore what you are seeing is an increase in open interest in the June month futures, which is actually a rollover from the present month to the next. And as far as price is concerned, there is this usual expiry / rollover related somewhat of an upthrust here. But my guess is in the absolute near term, and by absolute near term I'm talking of the next 5 trading sessions, gold might just show some amount of an upthrust, but at higher levels it's likely to get sold into. 29,250 odd levels will remain a meaningful resistance in the absolute near term, and unless that resistance is breached very convincingly, very forcefully, with a huge spike in traded volumes and open interest correlation, I think it's just a technical pullback which should get sold into at higher levels.
Let's take a look also at the base metal prices, which have seen some strength coming in today. But given the fact that the rupee markets are shut, the calculations really are not making too much of a sense. But for the near term, Mr. Bose, how would you look at this space? Because the month and the quarter have seen a negative impact coming in. Do you see the new quarter start positive?
No, Manisha, no. I don't think in the summer months base metals or industrial metals will do very well, unless money becomes even more cheaper, which is impossible. I think China's demand has temporized. There's a lot of inventory around the world. Some of it is shadow inventory. And I think copper prices are finally beginning to reflect reality, as are aluminium. Devoid of these two showing us some strength, I don't think zinc, nickel or lead strength is sustainable. But if I look at copper and aluminium as the lead industrial metals, I would say, looking at their situation today, their pricing, their inventory, metals look very weak going into the summer. They could become weaker rather than, show us any strength going forward.
Vijay, you anyway haven't been buying the base metal prices, but what do you make of the strength today?
Manisha, here again, part of the reason why you're seeing this upthrust on the daily and the hourly charts is because of the rollover process. Take that rollover process away, and I think in the next 2 or 3 trading sessions, you're likely to see upthrusts getting sold into. And since mid-December 2013, I've been opining that the industrial metals are looking sluggish. They're getting sold into at higher levels. The screens just don't talk about any greed or any buying confidence from the traders. Whatever open interest expansion you are seeing is basically the rolling over of March series to the April series, and therefore you are likely to get misled into believing that the open interest is actually rising. This is nothing but rollover processes, and in the next 2 or 3 trading sessions I would be fairly surprised if upthrusts are not sold into.
The crude oil prices have eased yet again today as there are talks between Russia and the West, and they seem to be having an offset effect on the prices. Even as OPEC's second largest producer of oil, Iraq has increased level of oil supply there. The Brent prices on your screens have declined, trading below $108 per barrel right now, but it still is near those 2-week highs. Mr. Bose, what is your sense in the energy space? Because we have seen constant declines for many days now, whether it's the crude oil prices or even natural gas.
Well, Manisha, 3 things. One, the supplies from Iraq, and especially northern Iraq, the Kurdistan region, Erbil, the movement into Turkey and towards the Bosphorus through via pipelines from Kurdistan, it's beginning to ramp up really aggressively. A lot of oil companies working there. ExxonMobil is present there in a big way. And a lot of people see the presence of Exxon in northern Iraq as an official seal of approval from American State Department. Secondly, after Russia's annexation of Crimea, which was inevitable, they need a warm water port. The Russians will always look at Ukraine as a buffer between them and the expansion of NATO towards Eastern Europe or towards Russian borders. This was inevitable politically. I think what has happened is people are now realizing that one reason why Russia is doing this is because Gazprom is in trouble. Gazprom supplies 25% of European gas demand. It's Russia's main instrument of foreign policy and economic foreign policy. That's why I think gas prices will continue to go down, basically the impact of shale oil revolution. From time to time, geopolitical pressures will come in, but oil prices, I think, will soften in the summer because there is enough oil around the world. There is enough tension in Middle East, North Africa, but there is also enough oil around the world. So the prices will not be firm, Manisha.
On your screens, on a monthly basis, we have seen 1% of decline coming in for the crude prices. The Indian prices, of course, have declined much sharper, and that's because of the rupee appreciation. Let's also get in then Vandana Hari. She's Asia Editorial Director at Platts, and she joins us on the show as well. Vandana, hi. The crude prices are posting a decline on a weekly basis. Have the Ukraine and the Russian issues led to this decline in premium in prices?
The tensions between the Western powers and Russia over what happened in Ukraine and Crimea definitely added jitters to the market. We saw a far bigger impact in the equity markets, but not so much in oil. The reason for that being that even though the US and the EU have gone ahead and imposed sanctions against Russia, those sanctions are not that far-reaching. There's certainly no sanctions or no talk of sanctions on the energy sector of Russia. So Russian crude supplies to the markets have not been affected. The country supplies about 4.5 million barrels per day. It's a major supplier of natural gas to Europe as well. So yes, a lot of things could have gone wrong, but so far the situation has been controlled. The sanctions are against, more like travel ban and asset freezes against individuals. The main reasons we saw prices getting a boost in recent weeks was really the supply problems in Nigeria and Libya, both of which have been around for a while, but they crop up, they become worse every once in a while, which is what was the case in Libya. The production has gone down drastically rather, to just about 150,000 barrels per day. Now, this is a country that could be producing 1.5 million or more. Also, the problems in Nigeria, there's been a force majeure. We see May crude loadings from Nigeria are likely to drop almost 200,000 barrels per day. So those are the two main factors supporting prices right now.
Vijay, what is your sense now coming in for the crude oil prices? Because, of course, it has been a week and a weaker month as well coming in for the space.
Manisha, I would remain circumspect about any sustainable upthrust in crude oil prices. The levels that I've been talking about of 62.25 to 62.50 band remain a very meaningful glass ceiling, and the bulls will find it a challenge to take crude oil prices above this threshold and keep it there if at all they want to lure in the buyers who are sitting on the fence. Unless crude oil prices go past this threshold and go past it very forcefully with higher volumes and open interest, I would still maintain that this is a technical pullback which will get sold into. What you are seeing is an open interest expansion which is basically indicating that shorts are getting built up as and when crude oil prices are approaching the 61.50, 61.70 kind of levels. If crude prices do go to 6200 plus, my guess is open interest will expand even more aggressively as savvy traders build in more short positions. So I would seek short selling opportunities at higher levels rather than bottom fish for bargains at lower levels.
Vandana, this is back to you then. The U.S. crude prices have gained on shrinking stockpiles at U.S. Cushing, but there is a decline when it comes to the overall U.S. inventories. Do you see the strong U.S. economic data resulting in strong U.S. consumption?
Yes, we have seen a boost in U.S. light sweet crude prices in recent weeks, and that has been mostly not so much because of growing domestic consumption as much as because of reducing stockpiles at Cushing, the delivery point of NYMEX light sweet crude, because of a lot of new takeaway capacity that is draining that oil to the Gulf Coast refineries in the U.S. Now, yes, U.S. economy is recovering, but U.S. oil demand is not recovering at the same pace. If you look at year-on-year increases, it's barely 1% higher than a year ago. Also, it's worth bearing in mind that U.S. crude production itself is reaching record highs now, not seen in the past several decades. So the U.S. is quite self-sufficient. There is a lot of crude production at home. Of course, it's not exported. There is an export ban. And so the main reason for the price increase right now is really the inventories at Cushing declining.
Vandana, also the crude prices are closing the quarter on a positive note. What is your sense as we get into the next quarter now?
I see prices more or less in a holding pattern right now. There are, of course, factors on the supply side which will continue to cause concerns, and Libya and Nigeria definitely among them. At the same time, there's a lot of balancing as well. So U.S. doesn't export, it's producing more crude, and as a result, it's importing less crude as well. When you look on the demand side, again, there's push-pull factors in pushing demand up as well as pushing it down. So we see, yes, economic recovery in the U.S., but then again, when we look at the emerging economies, you can't take continued growth in their oil appetite. Countries like Brazil, China, India, you can't take it for granted. So on balance, I see a lot of these factors continuing to remain with us in the coming months, in the coming quarter, and really no one single factor from what I can see overpowering and as a result swaying prices out of the current band. I think $100 to $110 for Brent seems to be par for the course for now.
$100 to $110 for the Brent prices is the view going forward. Vandana, final question. The crude exports from Iran to China, India, Japan, South Korea are running above the amount allowed under sanctions last month. Could higher crude exports from Iran really cap much prices?
It might be too early to come to any sort of conclusions as to exactly what increment in Iranian exports has been produced as a result of the easing of sanctions. Yes, we've seen slightly more exports from Iran. We have seen more production from Iran. So we estimate Iran is pumping about 2.82 as opposed to 2.7 in December. So that's not a whole lot. We're looking at no more than 40 to 70,000 barrels per day extra production in the past 2 to 3 months. it has been, now when you look at export figures to countries like China and Japan, those include condensates as well. And a strong naphtha demand in these countries could have prompted more imports of condensates from Iran. But by and large, any significant increase in Iranian exports is not expected. Now, let's remember that the sanctions curtailed nearly 1.5 million barrels per day of exports from Iran. Any significant return of these volumes is not expected until Iran and the six powers put in place a more lasting, comprehensive agreement with regard to the nuclear impasse. And from what people tell us, industry observers don't expect that permanent, lasting agreement to come into place anytime soon.
The agro space, where the wheat prices have seen a mixed trade today, while there have been reports of increased offtake by flour mills, and that has been supportive, but the closing has come in slightly on the lower side, and there has been decline in other grains as well in the market today. The sugar, in the meanwhile, has extended gains as speculators indulge in enlarging positions, driven by summer season demand and bulk consumers amid lower output estimates. A bit of a decline, though, seen in case of chana prices, where speculators trim positions following increased supplies from producing regions. Mr. Bose, what is your sense coming in for most of these agro space? Because while we are seeing a lot of jumpy trades, a couple of things which have been holding up really have been sugar in the recent days.
Yeah, I guess in the summer months, in the early summer months, Manisha, sugar offtake, it increases, especially in the Gangetic Delta and in certain other parts of India. And I think sugar prices at 3,100 wholesale per quintal look attractive to a lot of people. And the carry costs for the first 3 months are not much. It's about 100 rupees per quintal in the futures market. So it makes sense for people who will have demand come June, July to forward book in the futures month. It would make sense to me as a buyer. And in terms of chana, of course, prices don't look very bad. They don't look very good either. So I would say that chana prices are more or less where there will be demand attraction for buyers, and their prices are enough for stockists to get attracted towards it. The wheat thing you said is, of course, very promising. A lot of offtake from flour millers. I don't know why that is, given that stocks are good and we've just come out of the Rabi season, but they probably know something that I don't.
Vijay, what is your sense? You have been mentioning about increasing open interest and volumes as well on NCDEX. Has it continued today also? And where do you see more action coming in?
Manisha, today being 31st March, you are seeing a fairly insipid trading participation from traders. And my guess is the holiday / festive mood is also likely to have crimped the trading activity. NCDEX definitely has been seeing a creeping rise in demand, traded turnover as well as open interest, and I expect that momentum to sustain. Where action is likely is basically around the most liquid counters, that is chana, soya oil, wheat and sugar. Although I'm not too gung-ho about buying anything at this point in time, chana, I've talked about 3375 as a very stiff resistance in the absolute near term. We've gone there and come down. Sugar, I talked about 3100 to 3150 as a level where I would like to take my money off the table, having gone long close to around 2750 odd. Where wheat is concerned, I would expect support to come in at lower levels, but I'm a little circumspect about buying at 1570 odd levels. If I was to get 1550 or 1560, I don't mind really taking a look at long positions. But at this level, I would want to wait for lower levels at all.
Vijay, just to look at those potato open interest has gone down from 2-digit to 3-digit, and the prices have come down in the meanwhile by nearly 2%.
Well, Manisha, potato, I talked about how the March month futures, which of course have expired today, are likely to run into resistance close to the 1225 odd levels, and you've seen a closing there. April, I'm seeing a price of 1247, and the cost of carry that you're seeing in subsequent months indicates that at some point in time, potato prices are likely to run into resistance. and you should start seeking short selling opportunities at higher levels, because the cost of carry that a bull is expected to pay, the differential between April to May, May to June, June to July is exorbitant. I don't see how a bull can pay this kind of cost of carry and still make money once the contract differences start to shrink towards expiry. So where April prices are concerned, which I mentioned having closed at 1247 odd, if I see 1260, 1270 in the month of April, I'll start seeking short selling opportunities in July or later.